Hello and welcome to the 20th Datacloud Global Congress in the south of France. Joining me in Cannes now, it's Steve Tusa, Managing Director for JP Morgan. And Steve, pleasure speaking to you.
Thanks, great to be here.
First Datacloud?
Yes, it is.
Is it your first Datacloud?
It is.
Oh, wow, what are you finding?
It's great. I mean, these events are fantastic. All the important people who know everything about what's going on the ground are here, and that's what we're here for, to learn.
Yeah, and you got very lucky with the weather as well, at least for the first 2 days.
Yeah, today's a little dicey, but I think yesterday seemed great.
But it's fine to have meetings indoors as well. You don't want to be too hot outside.
Yeah, well, I actually took a taxi from the airport with a guy who's doing business here, and he said last year the weather was so good that none of them were inside; they were all outside. So this is not bad. It keeps everybody together today.
This is plain brain.
Yeah, exactly.
But look, there's a lot of people here, and it's a mirror of what's happening in the market. The market is booming. There's a lot of hype. There's a lot of construction. There's a lot of investment going everywhere. How would you categorize the first 6 months of this year? There's been so many announcements, especially from the US on your side of the pond. What's your temperature check of the industry?
Yeah, I mean, last year was a tale of two halves. The first half was very strong. All the orders were placed in advance. The second half was a bit of, I would say, pre-pipeline digestion. I think there was some volatility around the new technology that was being deployed. Perhaps some had over-ordered a bit. So you saw a little bit of a lull in orders in the second half of last year. The first half of this year is off to a screaming start. I think most of them have figured out how to deploy the second generation GPUs, the Blackwells, and you've seen a dramatic inflection here early in the year. I think there's also a budgeting dynamic where last year perhaps all the budgets were spent early. They were a little bit cautious in the second half of the year about deploying even more capital, and this year we've started off with growing budgets, but really more front-end loaded. So it's absolutely ripping to the upside so far this year.
100%. I mean, capital commitments have reached 1.2, 1.5 trillion US dollars in 6 months, which is something across the globe, not just US.
And what's interesting in the US, and we can talk about what's going on globally, but in the US, we're tracking currently a funnel of about 280 gigawatts across 500 plus projects. And you can kind of figure out what that run rate was last year, about 25 to 30 gigawatts per quarter. Since DeepSeek and the beginning of the year, we have already added about 80 plus gigawatts to that. So things since DeepSeek have accelerated materially early this year. So far, all systems go.
Yeah. Have you seen a lot more projects like 1 gigawatt plus campuses coming up to your table?
Absolutely. Absolutely.
And mostly US based.
Mostly US based. Yeah. I think when you look at it globally, US was leading the way. Asia ex China was right behind, along with the Middle East. China started really coming on about 9 months ago, and while Europe's been a bit delayed, in the last few months we've seen Europe really pick up from a pipeline perspective. So the whole world is now moving in that direction.
Yeah, especially France has got up quite well. I mean, Macron has really gone into it like full on, and Brussels as well.
I'm obviously I don't know intimately what's going on at that level, but sovereign AI is, in my view, as much of a existential competition as it is with the hyperscalers. The hyperscalers don't want to be the one that misses out on this opportunity, and I think that's happening globally, country by country as well.
I think what you said is very interesting. So, because I mean, hyperscalers come into this with a business mindset. We want to get clients, we want to make money, revenue, build, etc., all this sort of stuff. But what you just said about sovereignty, that has become part of the race. Do you think data centers are being politicized? Data center financing and investment is being politicized. I mean, now by the likes of the White House, by the likes of the Elysee, by the likes of China. Is this becoming a political race now? Whoever builds the biggest data center portfolio?
I don't think, I wouldn't use the term politicized, because when I think about politics, that means there's not a lot of meat on the bone, and it's kind of it's a bit empty in an approach. This is a real. They look at this. I think most that are involved in this look at it as an existential race that you're either going to win or you're going to lose. And if you lose, obviously, if I'm a hyperscaler, I'm thinking about this financially, about the returns. But I'm also thinking about, what if my competitor gets there first and I stop investing and there is really something here? That's more than just an ROI. That's a threat to your business model. So I think it's a little bit more than political. I think it's real.
Okay, fair enough. How do you see the financing models change on the back of all this? Because these things require a lot of money. I mean, 1 gigawatt campus requires about $40 billion to build.
Yeah.
So the levels of money that we're talking about, it's a lot. I saw a stat last week, not even know from where, but it was $7 trillion until 2030 for the whole of digital infrastructure.
Yeah.
So there's data center, cell towers, fiber, and the whole thing. But $7 trillion in the next 5 years.
Trillions are like gigawatts. You know, we used to in this industry talk about 10 megawatts, 20 megawatts as a building. Now we talk about a gigawatt, and when you say 1, 2, 3, 4, 5 gigawatts, it starts to kind of like lose how impressive it actually is. 1 gigawatt is a lot, and so is a trillion. Yeah. So there is a lot of money being put forth here. Just keep in mind, I think some of the concern has been that people compare this to the internet bubble, where the fiber build out wasn't that well funded. There were a lot of highly levered players making long-term bets on business models that weren't quite there. I think this time around, first and foremost, the initial build outs are built by extremely well funded balance sheets and cash. Even these companies that are throwing this capex out there at 10-20% of sales, which is a crazy number, they're still generating a lot of cash flow, and their balance sheets are very strong. So that's kind of where this has all started. And keep in mind that even data center construction in the US is only 5% of non-residential, private non-res building construction. And the degree of investable assets in this industry globally is very small as a percentage of global capital markets. So even though we're going from, we're adding tens of billions, potentially $100 billion of, different types of financing, it is still not a big enough piece of people's portfolios. So there's a lot of runway there. And now that it's considered critical infrastructure, it was considered a bit more of an alternative in the past. Now it's considered critical infrastructure. You're going to see, I think, all the major funds start to look at what piece of the pie they have to allocate here. So I think it's very different than what happened, 25 years ago with these poorly funded business models. I think there's a lot of runway from a funding perspective. Yeah. What's also different is I think the hyperscalers view this as more of a research cycle, in a sense, for at least the next couple of years. They are spending, they know there's something here, and they're going to spend to figure it out. And so in a way, it's a little bit, like build it and they'll come. It's not quite build and they'll come, because with research, you have to, trial and error takes time and it takes money. So that's why I think they're going to be committed to this longer than most people expect, even if the returns aren't there, today on these business models.
It's very interesting. I've never heard that before. So you think the next 24 months is more about just figuring it out?
Well, I mean, I think I don't know. I use some of the LLMs, and I'm sure there are people out there that are much more on the front foot when it comes to the tip of the spear of business models. But I mean, so far there hasn't really been a killer app that has validated the last couple of years of CapEx. So I mean, by definition, I think that we're still in the mode of getting to a point that we all know is going to be, I think, pretty beneficial for everyone. But I don't think anybody really knows what exactly that looks like.
It's interesting. It's almost a bit like the edge 10 years ago, but now we kind of have just 2 years to figure it out instead of a decade.
Yeah, and I also think that some of the past technology advances have been a little more mechanical in nature. I think this can take you in all different directions, and it can be ubiquitous across, I don't want to use the term society because that's beyond me, but what they're talking about doing, healthcare, automation, robotics, all the things that NVIDIA talks about. I mean, that's pretty ubiquitous and is very open-ended. So it's a little bit different than, us being able to order an Uber instead of or food instead of a taxi cab.
The commodity society.
Yeah.
When you look into M&A, so another big topic within this industry, there's been a huge wave in the 2010s. It kind of slowed down a little bit because we're out of assets to acquire, but the values have gone up, so we're still breaking records every year almost.
Yeah.
How do you view that going in the next 4 or 5 years? Are we going to see a new M&A wave?
I think you'll probably see some consolidation. I'm not sure that's going to be M&A per se. I think you'll see a lot of capital markets activity. CoreWeave just came out, and I think you're going to see more capital markets activity. There will be business models that will be funded, and then it'll shake out. I don't cover the particular, the actual AI software companies themselves. There's probably some more M&A there.
Yeah.
But right now it's more about funding these business models, and then we're going to see how it all shakes out. But certainly in a few years, when this all does shake out, there will be assets that'll be trading. But right now, I think they're still getting funded.
Yeah, another slowly growing trend, I think it's the IPO side of things, because there was quite a few guys came out of the public markets after they got acquired through this bigger first M&A wave.
Yep.
Now we are starting to see, especially in Asia, more people coming into the IPO space, going for the public side of the capital markets.
Yeah.
And we've heard some things in the corridors here. There's some European companies looking at IPOing as well. Do you see that in your day-to-day work? Do you see companies looking to IPOs more?
Well, I'm on the public side, so I wouldn't.
You can't talk too much.
we only read what you guys write on that type of stuff. But again, I do think that there are a lot of good ideas out there. There's a lot of infrastructure that needs to be funded, and the IPO route is certainly an option, as we saw with CoreWeave.
Okay, and then when you've also mentioned sovereignty, and I promised we're almost at the end because you've got better things to do.
Not better things to do.
There's a lot of hands to shake.
Other things to do.
Digital sovereignty, data sovereignty, another big, massive topic at the conference here.
Yeah.
When you look into global data center markets and where to invest money, how do you, or like the things that you look at, how do you see the industry being able to manage that? How do you go to one country and build something that serves that country, but some stuff cannot be exported?
It's a great question, and I think that's an issue for Europe.
Yeah.
I mean, that is one of the key reasons as to why Europe is not developing as quickly as others.
Is it holding back American firms from coming to Europe?
Well, I mean, Europe does not have the national champions that can build this out like the U.S. has, and obviously there's a lot more focus these days on what's going cross-border, and so I think that is a major challenge for Europe. I think it's less of a challenge for the U.S., but obviously for the U.S. and China, there's a little bit going on with the technology transfer, which is somewhat similar. So I think that is a major issue that I think Europe has to figure out. And keep in mind that LLMs and AI, I mean, it's very cultural. Large language models, I mean, there's all different languages in Europe, so it's a cultural thing, and so you kind of have to, to be able to scale that is a little bit different in a region like Europe, where it's obviously a bit more fragmented, although, the US is not exactly, the US is pretty bifurcated these days as well, but state borders aren't the same as country borders in Europe.
Looking into JP Morgan and what you guys are doing, I mean, you just lended $7+ billion into Ferocious as part of the Oracle data center development in Texas and the Stargate. Talk us through what you guys are focusing on, how much money you're going to bring into market.
Yeah.
Give us an overview of JP Morgan within the data center space.
Yeah, so I'm on the public side.
Yeah.
I'm not on the investment bank.
Yeah.
I'm not behind the wall in the investment bank. But JP Morgan is obviously a leading global bank with a big balance sheet, and this is a very growthy area. So everything we've seen publicly as far as what we've done there. I mentioned a part of the CoreWeave IPO. I would assume that there's from many levels. JP Morgan is heavily involved in financing this, as any bank would be.
Okay. What's one thing that worries you that I did not ask you about? What's one topic?
Well, I mean, I think if this thing doesn't work out, it's either going to be the supply side or the demand side, which is obvious, only two sides of it. The supply side would be a significant overbuild. I'm a little bit less concerned of that because of all the constraints there are around the ability to add, too fast. Labor, we've heard about labor, power, those things remain pretty acute at this stage of the game.
Holding some stuff back.
Absolutely. So I'm a little bit less worried about the supply side, but the supply side can all of a sudden be oversupplied if the demand side doesn't ultimately work out. I just think it's going to take longer for the actors that are trying to make something happen here to throw in the towel and say, you know what, I can't invest anymore. This isn't working out. I don't think it's going to work out. I think we have some more time before that happens. So those are the two things we're watching. I'm not a futurist. I don't know if I knew it was going to come of AI. I'd probably be doing something else. But as of now, like I said, I still think we're kind of in the middle of the research side of this. And LLMs are just the beginning. We're now kind of moving on to inference and ultimately agents, and that's going to require a lot of compute. So as we've heard from most at this conference so far, including the hyperscalers, they are still catching up to demand. They're still short. So I'm less worried about the supply side, and I'm more focused on what we hear on the demand front.
Okay. One word to describe 2025, industry-wise.
One word to describe 2025. Well, if I guess if last year the word that I used to describe the inflection here was ferocious. It was a ferocious investment inflection last year. I guess strength. I think we're still very strong, and I wouldn't say slowing. I wouldn't say stabilizing. I wouldn't say decelerating. It's building, strength. Yeah, strength.
Yeah. All right. Well, Steve Tusa, Managing Director for JP Morgan. Thank you so much for talking to me.
Thank you.
As for your home, thank you for watching, and do check our website and social media for the latest global digital infrastructure news. At the Tech Capital, you lead, we report. Bye for now.